All right, the highlight for Tuesday, January 14th. The days are relevant. The move or lack thereof wasn't. I'm going to talk about how a market, this is going to be an interesting highlight. And the market's actually, for guys that are been watching live, is still head fake mode, even though it took a while to kind of travel through this, negotiate through this consolidations, chop, chop, chop. But they're trying, there's got to be buy stops above here in real time. And you'd see them get into this area and then this area back over here. Two targets across around 88 and around 91. And that's what we're saying right now. But when we open, which is 8:30 Central, and I take it up to here, this damn market stayed in a 6-point range, 7-point range, which is incredible. All right. This yellow line right in here is the open, and I always put a yellow line on the open. And so when we went through the open like that, generally high probability this next time is good resistance. So it kind of comes up there and there, but this third time fired through it. All right, then this should be good support. Generally it is. Chops a little bit. It wasn't. Then this should be good resistance. It wasn't. It did that a few times, getting you to get emotional or anxious of getting stuck trying to buy or sell it, and then trying to play a breakout because it's going to break out or it should break out. And it really should have, but it just did something that's pretty unique. And that was stayed in a 7-point range, even though we came in with higher than average volume and a pretty wide 20-point range. And this is all in the S&P. So not to break out after a couple of attempts was odd. Not to follow through where it had to come up here before it negotiated back down here. Odd. To stay in the 7-point range 2+ hours into the day. Odd. Now it's finally breaking out because it doesn't have enough people along with it, which means there's not a lot of sellers. So we'll go to these 88s and these 91s. And this was a head fake that just took a while to actually move. But what I want to talk about is the emotion that's caused by and from a market. Now, remember, we're trading markets. And think of the root word of market comes from, or marketing comes from a market, right? What's good marketing make you do? Get you emotional. That's why I'm not a good marketer. I don't want to get people emotional and invest in what I have. I want people to use their common sense to have an objective expectation. But good marketing isn't about that. Good marketing is about getting you or getting people to look like the Cookie Monster. And the Cookie Monster has these big eyes that are all goofy looking when he sees a cookie. And that's what the market tries to get you to look like. How often you have the Cookie Monster eyes when there's a trade and a breakout in here and you're long at the top of the range looking for a breakout, short at the bottom of the range looking for a breakout, and it doesn't happen. And so that's why I always told people breakouts is a very advanced style of trading because you really catch most of the losers and miss some of the winners because it's moving fast. So you have to be good at getting out of losers and you got to be quick enough to get the winners. And then you have to make sure it's that kind of day where it's actually moving and you have some volatility. So even though the volume was up today and the range was wide, it didn't have a lot of volatility or a lot of drivers pushing us up or down. So breakout, it was easy to get chopped today because it was a day that marketed you to having these emotional eyes to get you all excited to try to play breakouts and saying, well, it just can't stay in a 7-point range. And it can. So you get stuck buying the top or selling the bottom. And then finally you think, well, I'm just going to sell the top. It's worked so many times. And then this is the time it doesn't work. Today is actually a time where you could just play the top, play the bottom. And even then it wasn't easy. But again, that's just not going to work forever. And by the time people say, I'm just going to sell 86s and buy 82s, look how many times it worked. Life is good. This is the time it goes to 91, right? So it already has worked a bunch of times. So don't get the Cookie Monster eyes thinking that you figured it out. And know when you have those eyes. You know, I got stuck selling it, buying it, and I look like, and not so much the Cookie Monster, but like that woman that sits up on the bed on the movie The Exorcist, my head spinning. That's what I would have looked like. I was in control. I didn't take big losers, but it was just wrong. Okay. Let's try to be objective, try to catch something that was a little cleaner like this. This was a call that we had where it was a transitional moment down. It's probably going to use that 82 area as resistance and negotiate back down. And it did. Not a huge move, but 3 points in a 7-point range is pretty big. Then it comes back in the range and just sits here, sits here, sits here. Now, the best next call would have been this head fake lower to go higher. But even that is taking forever to run. But that's the context of today. That's what a breakout and a head fake is going to look like when it got to be slower. So what's important is tomorrow they're supposed to sign phase one. I think they're just drifting sideways, as Dave mentioned earlier, until that happens. There's kind of like a lot of things out there that are floating around the car, but nobody has jumped in to take the steering wheel and drive this market. Iran's gone away. This U.S.-China trade deal is going to be signed tomorrow. That's gone away, it seems. Can Europe and the U.S. be a U.S.-China trade war part 2 for 2020? Maybe. Are earnings going to surprise us? Maybe, maybe not. Is inflation going to surface? Not yet. Is the FOMC, our Fed, or the ECB going to change their stance? Well, they haven't yet, so they're not in the car. Impeachment, as they go, and Nancy Pelosi, Speaker of the House, creates these managers, sends over the articles to the Senate, and they runs this trial. Do they have a couple curveballs? There's a very slim to no chance they're going to throw them out of office. They need 2/3 majority in the Senate to do that. So they're not going to do that, but that's why they call it a surprise. Do Senate Republicans throw some curveballs to make the president look bad and make it tougher for him to win in November? That could happen. That would be a surprise. He'd still be acquitted, but they gave him a rough ride because they hate him on the Democratic side, and there's a lot of Republicans that hate him as well. So they would love to see him shook up, even though they could then acquit him. That could be something the markets don't like because they don't like uncertainty. Something to watch as something that might drop or jump in to the car, become the driver. Right now, it's not like the car doesn't have a driver. It's not moving, right? And it's just parked kind of on the shoulder to fix a flat tire. And we're waiting for the next person or next thing to jump in the driver's seat and start moving us around. So be aware of that and manage your expectations accordingly. And remember, the word market is what we trade. It's the root word to marketing, which is supposed to get you emotional. Don't let it. Let it get everybody else emotional. Come in and pick up the pieces.